In July 2025, Standard Chartered became the first major bank to enable spot trading of cryptocurrencies. Winters and Giorgi say they're taking necessary steps at a moment of transformation for global finance.
When I look at the way our financial markets business has evolved in response to shifting client needs, there's a constant need to innovate. The constant need to innovate in terms of payment systems. And there's the big one it's getting a lot of airtime now, which is, are we going to be using stablecoins or digital assets as part of the mechanism for either local payments or global payments? We're making a reasonably big bet that will happen.
The game here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are entirely used, almost entirely used in the mechanisms of trading cryptocurrencies. There aren't many use cases outside of cryptocurrencies. More recently, they've been used as a store of value for people who don't trust their national currency. What we saw and see is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world and in what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need, because if we don't get that one right, the rest doesn't matter.
Crypto is different. Crypto is an investment area with its peculiarities and at times its own peculiar risks. On that one, it's just we go with our clients. And actually our regulators are quite happy that we get involved, because that way they get a clear view of what is happening in this exciting, potentially exciting new area of the world. The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
And will they be issued by mainstream banks? Will Standard Chartered be issuing stablecoins? Is that where the future goes?
The potential is for a wide variety of players to issue. The real question is what controls will exist, because if you want a stablecoin to trade like cash, you need to make sure that it's backed by the appropriate type of reserves. That's the focus of the regulators.